What's up? Hey, thanks for joining me. Yes, Peter. I was just doing a little bit of note taking here. I think was it? I don't know if were you here last week, and we talked about that with Bitcoin. Man, that level 2500, let's call it. That is going to be a very key level. Hey, welcome everybody. This is the weekly close live stream Wizard Edition. Apparently, TradingView decided to give new ranks to people, and I apparently got bestowed the rank of Wizard. And, you know, that's pretty cool. I don't have a hat for it, but basically, it's, I mean, they called me out because I've been doing this for almost 10 years on TradingView, and I love the platform. TradingView is freaking awesome. Let me give you a little bit of history of that. Well, first of all, let me do the plug. I do this live stream every Friday, 4 p.m. If you're catching it late, come and try to get it live, because I really encourage people to come and share the symbols they want to look at. I will give you my opinion on it based on my analysis, which is very simple. And I like to share what I know. I've been doing this trading thing full time for the last decade. And believe it or not, my methods have gotten a lot simpler. I was having some discussions this week with some close trading friends, and yeah, eventually you do this long enough and you put less indicators on a chart. So also have a Discord, which I got to plug. Good to see you, Jen. That's just a trading community. I don't charge for it. I just like to have people to share ideas with, get ideas back, because I can't look at everything that's going on. And I try to keep people apprised of what I think is going to be useful, what's going to make some money. Opportunity. And I look at opportunity a very different way than a lot of people do. A lot of people being those that chase hype. I like to look for opportunity. I like to look where no one else is looking. And I had a post earlier this week. We'll go into it if we can. Topics of discussion today. I'm looking at crypto, and crypto is pulling back. So we're going to talk about that. Also, we got to talk about Tesla. That's a little bit of a mixed feelings on Tesla for me because of what it's been doing. The trade that I was in, that I closed out part of it today. It was a short, but it wasn't exactly what I wanted to, so we'll talk about that. But also, if you guys got something to look at, make sure that you post it as well. Kathy's calling for 2K Tesla. Okay. Let me move that guy up here. So we'll see. I mean, eventually, within a year, I don't know. See, that's like Bitcoin within $1 million. I just don't think it's in anybody's interest, except for the people that own it and are trying to get people to buy it, to start saying that within a year something is. Did she really say that, or are you joking? Because that's some Michael Saylor level, like, shilling. I'm not really a big fan of that. So a 524% gain. Yeah, see if you can find that article. I just don't think it's really helpful to tell people that. I really don't. I think it leads people to make some bad decisions because shaking my head. All right. Let's talk about Bitcoin to start off with, because I just got a volatility alert on it, and it is finally pulling back. I know at some point, either this week or last week, people have asked me, are we going to get a pullback specifically to 26,000, 25,000? And I got to say yes. And there's a lot of stuff lining up there. And yeah, we'll take a look at Apple here in just a second. Let's talk crypto first. So both Bitcoin and Ethereum, the two major players, that's the ones I want to look at today. They are both showing a level that makes a lot of freaking sense for it to pull back to. So the low right here from March the 10th. Now let me talk about that for just a second. So a lot of news articles have come out talking about why Bitcoin rose so much. over the last few weeks because of the banking crisis. Well, you haven't heard much about that banking crisis anymore, have you? Because really it was only three banks that failed, and the reasons that they failed were pretty well understood by now. Bitcoin went up because of a little bit of hype. You had that guy out there that was saying that Bitcoin was going to go to $1 million in 90 days. Again, I think it's kind of obscene because it takes people that haven't really studied, Bitcoin or price action, and it tells them you're going to be super wealthy if you buy this. But the problem is, I guarantee you that guy that bought it, he was the former CFO of Coinbase. Don't remember his name, but he was the one that, back in here, if he had said that Bitcoin's going to go up from March the 9th when it hit this 50% level, if he had said something like that, if he had called this as an opportunity to buy Bitcoin, as well, I don't know, someone else had on March the 15th, updated March 15th, if someone else had called this as a simple technical level to go against the banking crisis FUD, if he had posted his Twitter account there, or his tweet there, I would have had a lot more respect for it. But in here, what you're doing is, this is going back to some other method of analysis. This is your Elliott wave type of scenario where you have the one, that's the first push, you got the two, you got the three, which is the bigger media part of the trend, and you got the four, and then here's the five. And so you've already had this play out. And so people that are buying in this range right here they're retail. They're the chasers. They're coming in. And they got a little bit of hope in this last week. But I'm always going to be looking for opportunity. And so the opportunity for me is going to be the next 50% pullback. And we're going to start that from the low that it made on the 10th up to this high that it made. Now, to be fair, I was trying to see if maybe Bitcoin would hit 3,200, but we didn't. That's okay. I don't know. But now people are looking for it to come down to this level. Now, the reason I like the 25,000, let's call it 25,250, is because it matches with that February highs that we made. You can see where price respected it here. And now you also have is the 50% of this whole retail leg up. That's what it's most likely to pull back to. And so when and if we get down to this level, I'm going to be looking for maybe one of the two things that I like for an entry, either at Tinkinson recapture, which is where we get back above the red line on a lower time frame, or a spike. One of the spikes I like, where it punches through, makes everyone think that it's going down, and then closes back to hold that level. So something of that fine. I'll post it on Tradingview and Discord if and when I see it. But this is going to be the level to watch for Bitcoin. Now, Ethereum, almost the same type of pattern. Let's clean this up a little bit here. So, same price action from March the 10th up until the high of April 16th also brings us down to this level, this inflection level, this little high range that we had in February. And so let's call it 1760, 1750. Let's say 1750 is where this thing is trying to pull back to. And then we need to look for an opportunity, a setup here. Now, if you want to just not be too complicated about it, I'm not going to be mad at you if you were to just take a trade where you try to shoot for that high and you give it maybe a 3-to-1 risk-reward ratio. If you just want to set that order out there, right now, that's actually a solid trade. That's a solid trade. Because if you take enough of these things, you're going to do well because you're aiming to make more than you lose. I like it also because if you put your stop in this range, if you make it there, you're going to give price a chance to kind of go and mess around in here. but not really breach this level here. I mean, this is what some of my trading friends call an auction zone, where you have, you know, buyers and sellers having a little battle, because you see how the price, like here's an auction zone here. There's the first auction zone, and then really you get back up into let's just make a new one. Back up into this auction zone here. And so if we get below that level, then it's probably going to just completely die. So this is the pullback here. And likewise, going back to Bitcoin, again, if let's just make this out and make sure. Long there, I'm going to play not for the tippy top high, but this little top of the range here as the target. Then I'm going to set 3 to 1. And there you go. And that also lets you, stay out of this range right here. If it comes down into this realm right here, you don't want it. You don't want it, because that's going to set up a much larger retrace. As far as Ichimoku goes, it also works out well there too, because, again, if the guy on Twitter had talked about Bitcoin when it was breaking out of the Ichimoku cloud back in January, I don't know, like somebody else did. If someone had talked about it when it was coming outside the Ichimoku cloud, which over the 10-year, decade plus long history of Bitcoin, I've studied and watched and done back testing on, if someone had looked for that and posted on Twitter about that, like I posted on TradingView, then I'd have a lot more respect for them. But they did not. They waited until this last phase of the leg at 30K to start trying to draw people in, to provide exit liquidity for, look, we're not in this market. We're not in 0% interest rates anymore. What you're in is a scenario a lot in Bitcoin and crypto is a lot like the era of 2019. 2019 was after the big run up to 19,000 in Bitcoin. And what did you have? You had this nice trend, money to be made there, but then it was not sustained. And it would take almost another year. And don't forget, a COVID crash back down to that level before it would moon once again. And so 2023 is looking a lot like 2019 crypto market. And so you got to be really careful. Don't be drinking the Kool-Aid just yet. You probably got another year or two until that's going to actually happen. Now is a trader's market, or DCA if that's what you want to do, but you're probably going to get to buy your Bitcoin cheaper. You're probably going to get to buy your Bitcoin cheaper. So again, if you're trading it, I like this as a trade. And this tells you what Bitcoin's going to do. If you stop out here, then it's probably going to pull out, and the reason pull down. And the reason that I brought up Ichimoku here is because also, just as I like clean, just as when price got out of the cloud back in January, if price gets under the cloud, in other words, if you get stopped out on a pullback here, your stop is actually a breakout short. And so if you get stopped out, if you reverse it short, again, that would be a pretty decent trade. So over the next couple of days, watch for what sets up as we continue pulling back here. I think is a really good chance to keep on pulling back, because there's a lot of people that read that tweet that bought inside this range right here. That's when all the people kind of got drawn in. That's when a lot of people came into my stream and asked me, what do you think? Because that's when people got interested. Nobody was interested back down here. Like the Bitcoin chats that I'm in, silence. Nobody was really acknowledging that this pullback was good either. But people were definitely talking about it here when all the articles were talking about how Bitcoin was up 80% on the year, blah, 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 blah. One of the reasons I do this Livestream, one of the reasons I teach, one of the reasons I have a Discord, one of the reasons I talk to people about trading is because I want to try to make people better at decision making when it comes to investing. And one of the best things, one of the primary things I want people to do is to reject narratives, to not jump into something because people are screaming about it. I mean, that's a talking point that I kind of want to go into today, but I think I've ranted long enough. Let me go to check questions. So again, if you have a question, if you want me to slow down and explain something, post in the chat. If you got a symbol you want me to look at, I do this for you guys. So if you're in something and you don't know what to do, I'll give you my honest opinion. You may not like it, but I'm here for you. So let's take a look. I think someone Balaji is his name. He's a household name now because he said really, really outlandish things. And unfortunately, that is what gets attention. What gets attention in trading, investing at the end of the move, like your Michael Burry, your Warren Buffett, if you have really good results, then that gets attention. But otherwise, saying outlandish things that people want to hear, Bitcoin bag holders want to hear that they're going to be fabulously rich, that Bitcoin they bought at 30K is going to turn into $1 million. That way, you put in like a, $5,000. What is that? What's see, 1 million, because I am not a super big math person. So 33 times 5,000. Let's say you have 5,000. Yeah. If you just bought a Bitcoin or $5,000 worth, you'd have a good $166,000. Then you can go buy that Tesla that you want. That's all you need to do. All you need to do is just buy the Bitcoin. Not realizing that this guy, if he just goes out and says this Balaji guy goes out and says this about Bitcoin, he already probably has, let's say, 100 Bitcoin. So if Bitcoin goes up 1%, 2%, 3%, 4%, he's already made money on that bet. What is it? He bet someone, I don't know, if $1 million. He basically was saying like he's going to do a bet of $1 million. He could very easily own enough Bitcoin that a few percent movement would net him well over $1 million by just making that tweet. He's just manipulating the market, manipulating people's opinions, taking people's money. You got to look for opportunity. And opportunity is going to be where people aren't looking. All right, let's see. Scrolling back up, I think someone wanted to look at Apple. Let's see here. All right, thanks for the chart. Let's see. So, if you've been looking Avireni, I think I keep things pretty simple. I can see that you have a diagonal channel going down here. I'm not a huge fan of diagonal channels myself, and the reason for that is because people tend to redraw them when they don't play out as people expect. I see that you're kind of going closing prices here, so you do kind of see it. I'm not knocking it if it works for you, but let me take a look at Apple myself. I think I've looked at Apple. I'm not really in a position of Apple alone, but and that's because I haven't really seen anything that I like. See, I try to avoid consolidations like this. I try to look for pullbacks to clean horizontal levels. Apple, honestly, I mean, you have to kind of use something like that, like a diagonal wedge, because I don't really see anything that I like. One thing I would have been looking for was the COVID low to all-time high. And if we had gotten a pullback to actually 120, 118, looks like we missed it here, that would have been a good level for me. But Apple's pretty strong. And so, I mean, I'm going to assume that this thing's going to come up and retest this top. It's still starting to trend bullish, getting out on the weekly. I'm just going to assume it's bullish. I'm going to assume that the market is bullish. Actually, let me finish going through chat, and then we'll look at the stock market. All right, so CNBC, Kathy Wood. Price target for 2027 is $2,000. $2,000. Okay, so let's just do a straight line trajectory and see. Is that reasonable? Let's look at it. Look at it critically. Oh, for those that don't know, for those that haven't followed on Discord, one of the trades of the year so far for me was Tesla short, and Tesla short made a lot of posts about it. I had a target of 160. What Tesla did was first, don't need my spikes, came from, I believe it was the low here to here, right? So the entire multi-year move up to the all-time high created a level here, which it held back in May of 22. Solid level. Held it, came off of it. I took a long off of that, but just like my short, it didn't come up to retest the high, and so I had to close it out at basically break even when it was doing this tomfoolery right here. Then, as it broke below, went into the valley of risk, where you don't know where the bottom is, it once again started pulling back up to it, and then this support, which you can see in the past, turned into a resistance. It was also the 50% of the entire down move. Solid short. Had to take it. And so what my target was in that case was, again, basically the 50% of that move up. Well, I did both a short shares and a vertical debit spread. The short shares did not hit my target. Very frustrating. I closed them out right about here. And then today I got a little reminder that my vertical debit spread was about to expire, but it was a 170. Let me look it up real quick. TSLA. Believe it was a 170, 180. No, it was a 175, 180. Let's just go back here. Because Jen, buddy, let me show you something. Jen here went with $5 puts. Okay, maybe we'll get some delta out of those, but if you want to play it for real, for realsies, you need to do something that has a chance to work. I knew I wanted to go bearish, and it almost doesn't matter where I put it in the hindsight. It could have been 180, 175, or it could have been 175, 170. I knew I wanted to get it to 160 by today's date. So today is 4/21. Hold on. There we go. There's the expiration. Okay. So from here to here, that's where I want to do it. Now, one of the things that I try to do, people always ask, how far out should we do our expirations? Well, if you think about it, just draw a straight line trajectory of what price has gotten it to there. Okay. You can also do here. It's imperfect, but the best you can to kind of get an idea for how long something might take to get to where you want it to get to. Okay. And so basically what you would want, ideally, if it follows the same cadence, the same speed, is by March the 6th, we would have gotten down to that target. But things can take longer, and because you don't want to have it expire before it goes in the money, you want to give yourself a little bit of extra time. Also, you don't want to use weeklies, especially when you're doing spreads, vertical, iron corner, anything that involves more than one option, a spread. You want to use not use weekly expirations, because monthly expirations will have a lot more volume, a lot more liquidity. And so you're going to get better spreads between bid and ask, letting you get into the trade at a good price and get out of the trade at a good price. So weekly expirations are not ideal for something, especially if you're going to take it out longer than a month, which in the case of something I put in February, I know it's going to go in at least a month, and then I'm going to give myself at least one more month of expiration. Yes, going to give myself extra month just to make sure that worked, and that's how the decision making was made. And so, see, order Tesla. This was actually put this on March 3. March 3. Was it? It must have been when it pulled back again. Okay. Well, and we did it for a 160 debit. I bought this spread for 160. Let's go to March the 3rd. I think, oh, okay. So this was when, oh, I know what happened. So as I'm watching this and the trade has started going in my direction, one of the things that I noticed was it had pulled back to a 50% of this little short range right here, because we finally had this drop right here, which got a lot of people scared. That was as the banking crisis. I think this was just independent. Pull back to here, talking about it with my trading friends over on Amateurs Discord, and pull back up to the 200. 200 being a nice psychological level. I decided to add to my position. That's why I did that. And so that's when I put it on, was here. So again, been taking it out to April. So 160 was the debit price that I paid for it. And then what is going to be the max price of a spread? Well, just subtract the two share prices from each other. 180 minus 175 is 5. And so what I want that spread to do is go from 160 to $5. I'm going to buy it for 160, take it to $5. One of the reasons I chose to do a spread instead of a single was because IV, implied volatility, was very, very high. So 5 minus 160, that means that I was looking to make $3.40 of profit divided by 1.6, which was my risk. And so that's about a 2-to-1 on that vertical spread. Ideally, I'd like to get a spread for $1.25, a $5 spread for $1.25. That way it would be a 3-to-1. But this worked out. It was a little more than a 2-to-1. That worked out just fine. So that was this right here. But yeah, the shares I had to close out too early. And then now, as we go forward, it's going to hit 160. Am I kicking myself a little bit? No, because I didn't want a trade. I was not going to be able to forgive myself if I let a trade get that close to my target and then go fully round trip into a loss, especially since I'm short shares of Tesla. I mean, who the hell knows what can happen there? So coming back up into here, getting a little bit of profit is fine. Had the fixed risk on still. So ultimately, playing it off that level was pretty good. Now, as we come into this level, I'm going to be looking for opportunity. I'm going to be looking for longs. I'm going to wait for it to actually hit that 160, trigger that Thinkorswim alert that I have. Be patient about that, and then start looking for a setup. Start looking for some kind of a setup. So that's my plan there on Tesla. All right, go back to chat, catch up. All right, Amazon. Amazon, I am a big fan of for the long, long term. Why? Because if you go back to that low of 22 years ago, the all-time low of, well, this is split adjusted, but 30 cents. I'm not sure what it was back then, but the low after the dot-com crash, all the way to the all-time high, you have a 50% pullback level at 94.20. I definitely bought Amazon, bought it for me, bought it for my nephew, bought it for my niece. It's freaking Amazon, and it's half off. It's not going away. No options. Buy, hashtag disclaimer, this is not financial advice. Buy damn shares. Put it in your retirement account. You know that Amazon's going to be there in 10 years. You know it's going to go up. And this is a it's a freaking 25-year level. Come on. Anyway, but if you want to dig down a little bit into an Ichimoku breakout, well, the monthly, it's being held by the cloud. In other words, for this to be wrong, Amazon has to come down to here, into the 60s. I don't think it's going to do that. Weekly hasn't quite gotten out yet, but as I think he's noticing that the daily is actually starting to break above the cloud. Yes, and that's one of the things that you can do. It's a little one of those little Ichimoku hacks that I've studied over the years. I don't quite use it that much as I used to, but it is valid. One of the things you can do with Ichimoku is you can wait for price to pull back in, let's say, here's the monthly time frame of Amazon, pull back to the cloud, which is also a 50% support level. All right, you got your support. It hit. You can buy it there, or you can wait for go two time frame sequences down. You know, the weekly doesn't show it, but on the daily, in other words, monthly is a trend and pullback to support. And then daily, you're going to see a lot of noise at that support, but smiley face. But you're going to also be able to see when price is going to start coming out of that cloud as well. If you had decided to jump it, and let's say even if you had bought it when it poked its head out here, that's still a valid Ichimoku breakout. But if you notice, even with the Ichimoku trend rules, even though price got out here, momentum did not get out here. So you did not need to close your bullish trade. You took a little bit of a drawdown because, hey, that's a breakout. We got to take a big risk on a breakout because oftentimes it needs it. But now you're even coming back up to there. So yes, there's a lot of different ways to play this and look at this. Hopefully, as the years go on and as I'm a wizard of Tradingview, I can point this out. In fact, you know what? Thanks for pointing that out, Market Cues. That's actually because I got that wizard status, I feel like I need to produce a lot more content. So I'm going to make a post about this topic, or maybe even a video this week. I haven't made a Tradingview video in a week, so we're going to call this Ichimoku. Amazon Ichimoku. That's going to become a post-it note, which is going to sit right there. All right. Good call on that. Gave me a chance to explain. So that's why I like to do this, guys. I like to get the feedback. I like to talk about what you guys are looking at because I can't just sit down and write everything that I have studied in a big long bulleted list. Jen keeps on encouraging me to do classes, and maybe one of these days, where I'll actually have the time to sit down and like put everything out. But just watch this. I mean, Amazon's Amazon. All right. Let's see. Let's check out. Wish is going to replace Amazon. What? Yeah, Palantir. Why am I in that stock? Long Amazon. Yeah, I mean, Amazon. I gotta admit, I lost money trying to play Amazon off of in 2022. You know, when everyone was thinking that this was a pullback, what I was looking at with Amazon was this 50% level right here. In fact, it came down and hit it. This is pre-split, so it's 134. But when it broke down, I cut it, took the capital loss, wrote off my taxes, and then now I'm back in again at a better price. So while some people just want to hodl, whether it's Bitcoin or stocks, if you talk to any boomer financial advisor, they're never going to have you sell anything. But you can do better. See, I'm able to not take this much. So what is this? 126. I'm able to avoid taking a 28% haircut on it. I can buy 28% more Amazon by just taking this with a stop from level to level. So yeah, I'm not pissed off at Amazon for taking a loss because it gave such a much better opportunity, much cleaner. It's gonna like if this thing plays out over the next several years, it's gonna be a really good textbook case. That makes it worth it. But Tesla going to 2000. Let's look at this trajectory. Let's see here. Tesla to 2000 by. I mean, I'm going to entertain what Kathy's saying, but like for her fund to not die, she needs to be saying these things. It's kind of an existential thing for her. So basically, we're going to need at some point some sort of a YOLO run like so. So what she's trying to play for is essentially another repeat of 2020 to 2021. Like that, but fractally, hyperbolically up. 1,000% move in 4 years? Maybe. Crypto freelancer, what does the ATR percent mean in spike indicator? Good question. If you're using the indicator. So let's find an example here. What's a good example? Where's one that I've used recently to good effect? Well, you will use the Euro dollar one on the daily. So I'll clean this up. This one actually did not play out. So when I have on the spike indicator, by the way, this is free for people. If you just send me a message on Tradingview, I'll send it to you. What this indicator does is it looks for price to do a false breakout. In other words, you get a little bit of consolidation, like a few highs, lows, etc. And then it looks for price to break above it, but not continue. And then close back inside this red line or inside the price action here. And so where the ATR clear, what it means is the ATR clearance. In other words, ATR stands for average true range. Average true range is basically you take the average of the high to the low for ever how many bars back. That gives you an idea of how far price should move normally. And so that lets you have a measure of volatility. What's significant? What is a move? And so 84% of the ATR is how far this price moved outside of the last high. So it's basically taking a measurement relative to ATR. That way it's consistent no matter what chart you put it on, no matter what instrument. And what I do is you can actually filter. Like I could set this for 60, and it will show me a lot more. Actually, let's do this just as example. I can set that for 30, and then it's going to bring up a lot more spikes. Basically, it's going to bring up this one right here because this one's a much lower one. But I want to typically use 70 or even better 80. Or the higher the number, the better. Doesn't necessarily mean it's going to be 100%, but what that lets me do is filter out significant spikes. And so that's what that means. That's what that means right there. Good question. If you got more questions, hop on Discord and post a question in Discord. And I'll definitely get to it. Yeah, this was one I remember from, this was a good one from 2 weeks ago in April where you had UPS on the 30-minute. So it came to this high, broke above it, closed back inside it. And then that was a really good sign of reversal off of that. So that's what I'm trying to look for. I'm trying to look for it to break above it. And what was the ATR clearance there? That ATR clearance was 115%. So in other words, this bar, this high, was 1.15 times ATR from that one, if that's what makes sense. So you take the average of all these, comes up with a number of, let's say, 2, and this was about $2.30 above that one. So that's what that represents. That's 115% of ATR above that last high. That's what it represents. So market cues, I think I talked to, I got to catch up with these things. DXY. Yeah, so DXY, definitely need to look at that. Been watching this. Oh, did we close this week below it? We did. We have 2 weekly bars below, close below this 102. You can see where it even came up to this level, which by the way is again from the low of January 21 up to the high. Is that the all-time high? No, it's not the all-time high. But yeah, look how clear that is right there. I mean, this, go out to the quarterly because it's the dollar. And we look at, yeah, if you do, it looks a lot cleaner here if you look. So that 102 is a key level to look for. And price respected it for the month of January. We had this big run up, but in these last 2 weeks, you can see where we closed below it last week. And then this week it came up, tried to break it, could not get up. So dollar is breaking down. This looks like a breakout coming off this. So Ichimoku wise hasn't quite started to trend down, but I don't like this as a long anymore. Let's look at the component. I think euro dollar is going to be flipped, but same kind of pattern. It's also above its level. It's giving you the first signs that the dollar is going down. And US dollar, JPY, the yen, the other major component, holding a little bit better. Yen actually came down to the 127.50, and it's not coming to retest it again. So a little bit of divergence there. Interesting. Forex market is going to get interesting. I think I've been looking for this to come back up to 140. We'll see. All right. So do I think it's confirmation of the DXY down move? It's the start. I mean, that's my rule. You know, you look for 2 bars to close above or below level, and then your assumption is going to be it's breaking that level. So yes. All right, Valerian K, what you got for me? Let's see here. This is BioNTech, coming down to some lows. What do you see? Why don't you tell me what you see here? Hi, Stone Pilot. UBI. Ubisoft Entertainment, gaming company. Man, gaming used to be doing a lot better, wasn't it? Is this what UBI Soft? Well, got a breakout going on. I would say it's a lot better to buy it now than, for the last couple of years. So, Casey asked, do you trade new highs? In a situation such as this, where you have some past price action. As a general rule, this has been kind of a weakness of mine as a trader. I don't really like breakouts. I like pullbacks. I'm a contrarian by nature, and so if something is making new all-time highs, then that means that people are getting really, really into it. And when I see lots of people going one direction and creating a big breakout, I get more conservative. But when people are discounting it, when people are saying that it's worthless, like oil or something like that, when oil goes below zero, those kind of narratives I really like to reject. I'm just not a very good breakout trader. I just temperamentally, emotionally, I don't like breakouts. Yeah. So, but for you, UBI soft, you got a breakout forming here on the daily. It's pretty solid. Let's draw this up. So I'm gonna use, this would be a longer term thing because it's a breakout. You're basically trying to play this low. I mean, this is, let's start over from the beginning, or this big run up from 2012 until here, because this is really the story that we're playing off of now. This is the history that we're looking at. We can go to the monthly and do it. Okay, so from the low in 2011 up to here, created a support. So what you would look for in any kind of thing like this, just like Amazon, is look for what price does when it pulls back to this 50% level. One second. So, come on. And so what we're going to do is we're going to look for this and see what happens when it hits this 50%. That's the buying opportunity that I would like to do. And so throughout this whole thing, as it's making new highs, I'm thinking that I don't really want it. And this kind of a move to break below it like so, and then now we can go to the weekly and see you have your 1, 2 breaking below it. That's not a good hold of that level. And so at this 55 point here, where if you had gone long here and you have this much here, you know, if you had taken just a 3-to-1 trade like so, buying it on that pullback, trying to shoot for that, you probably would have gotten either stopped out there, or if you were hodling, now you get an opportunity to get back at break even as it comes back to here. And then probably what it's going to do is it's probably going to come up here and trick some people. But the reality is it's already broken that level. I don't know that's what it's going to do because I didn't memorize it. But what it's probably going to do, I mean, this is why the level is so important. Even though you get this little bit of hope, it didn't really hold the 50% of that trend. And you didn't quite get back up to that high. So now you're testing it again. Let's just speed this thing. Well, okay. The reason I put this in here is because once you break that level, you go into what I have termed, this is my phrase, the valley of risk. The valley of risk is basically where price is going down, and you can't see the bottom of that valley. You don't know where this thing's going to stop. What I like to do instead of trying to, catch falling knives, as it were, because that's what you're doing in cases like this, because you don't know where this thing's going to stop. In fact, the last year of price action, anything from Facebook to Tesla before it went up to Bitcoin as it was going down, once you break that level, you don't have any structure left in terms of the trend. But what you can do is you can look for a situation like you have here. Let me clean up a little bit. Where now you have a reasonable reason to try to go long again, because you have the benefit of past price action, this trend going down here. So now you can say, okay, my target is 53. I like that target because it's also got some past inflection there. It was also, if you recall, the 50% of that move up. In fact, this looks a lot like what Tesla did in terms of theme, where you broke, if you remember on Tesla, you broke that level, came down into this valley of risk where you don't know where the bottom is, comes back up. So what I would like to see is it to do something like that, where it's going to come back up and retest this level once again, the 53, 55 level. Now, what you can do, since you know where that target is, you can size your position. Here's your breakout. You don't want it to break that low again, so give it that much, figure out the risk, and then you can take it all the way back up here for a really good, solid risk reward. And so that's how I would structure something like this. You know where you're wrong. You know if it breaks this low. Probably what it does if it breaks this low is it's going to go a little bit lower, and then it's going to come back up. So it's going to be a little tricky here. I would say go small, but that's how I would structure it. This would be the way to kind of put it together. And it's a lot better to do it now than it would be to try to, catch this falling knife all this way and sit here frustrated. Because this really, you had some potential opportunities of volatility in here in 2022, I guess. But now, after this big trend down, you've actually got this breaking out of the cloud. If you wanted to be a little tighter, you would probably want to look for this last leg to be your target, and maybe the initial breakout looks something like this, where you're trying to shoot for that 34.55. So those are your two levels, 34.55 and here, to play this breakout. So, all right. I see bullish divergence coming down to support in a clear defined structure between high and low. Bullish divergence in terms of I can't see right here, but that's the RSI, maybe in MACD. Fair enough, if that's what works for you. I'm not particularly an expert on those. I do see where it's coming down to lows, but what I would like to see, let's bring it up here. So this is BioNTech. Here's how I would play it. BioNTech. BNTX. Daily. Okay. What I would like to see in a situation like this is what I call a Tinkinson recapture, TS recapture, where you get back above this red line. And so if this red line goes as such, eventually it's going to let price get back above it. And then I'm going to look to buy it on that red line to try to go back up. Look for that first sign. You actually had it right here, but this thing is really tricky. Not really something I necessarily want to play, but you're definitely now hitting those very, very low lows. Be even better if it hit that one right there. Yeah, so you have that low right there. Wouldn't have gone in on this one because you haven't hit that low yet. But if you get a little bit more down move next week, look for it to hit it, bring that red line down, and then take it back up like so. Give that you want a situation kind of like this where it gets back above that red line to here, but after it hits the big long-term lows. So that's how I would look for that. So if you see the bullish divergence, that's the way I would look for it to play it. Because yeah, you can see these divergences, but what I'm always focused on is the setting up the trade in a good risk and reward method. What I mean by that is if we go long here, let's say we want to take it up to the middle of that range, then I know where my stop needs to be. So I can structure a trade around it because that line is going to be fixed. It's not going to be arbitrary. It's not going to be, the RSI is up a little bit. No, it's going to give me a structured trade that if I do enough times, earning 3-1 on my winners, that I'm going to come out on top. So that's how I look for it. All right, UNG, natural gas. All right. Yes, you are correct, sir. UNG is in the valley of risk. Hey, do you remember when everyone in Europe was going to freeze this last winter? Remember that? Remember that narrative? Russia invaded in 2022, cut off all the energy that Europe needed. And so what did natural gas do? It went mooned. Because the narrative was if well, not us, but Europe, maybe you're in Europe, had a super cold winter, that they were going to need a lot of natural gas. But what ended up happening? Not that cold. We had a really cold Christmas. Unfortunately, I didn't get any snow. But yeah, and so this is basically the fall off of that. Now, that being said, I can't ignore these lows. I can't ignore a good destroyed narrative. So let's take a look here. Do we have anything? Wow, no, we don't have anything to go on NG from there. Let's look at actual natural gas futures. How about that? So I would actually look at natural gas futures themselves, and then use UNG as the vehicle for that. So it's trying to get down to 144. It's trying to. It really wants to. Yeah, this, as I said, this right here is the valley. That's the valley where you just don't know where it's going to stop, and you can still get a little more sell-off into there. You just don't know. But this is going to be worth looking at. Be looking for narratives. I would watch CNBC if you do. Read financial media and find out when people think that the world doesn't need natural gas anymore. That's a good buying opportunity. So, had to take a call. Have you discussed how superior KR is? All right, well, I'm going to start wrapping up here. You can see the clock. It's 5 o'clock. I give you guys an hour, and I'll take longer if you get me talking. So if you got anything else to look at, let me know. I'm going to kind of take us out with a little bit more market analysis. But if you got something to look at, put it in the chat right now because I'm going to start wrapping up here. I'm going to look at some of the things I'm looking at stocks wise. So let's see what the positions I really care about are doing. So the one I want to look at is, of course, ATVI, the merger with Microsoft. This little move up right here that finally happened was because the European regulators, or maybe the UK regulators, they approved it. Now, the only reason it's not all the way up at $95 a share, which is supposed to close this summer, basically Microsoft's going to acquire all Activision shares for $95 a share. There is still a merger arbitrage of 11%. So there's a little bit of uncertainty there, but yeah, I haven't seen anything that's not going to happen. I'm just basically staying the course. I've took some options almost a year ago. Actually, it was a year ago. I think it was February. Yes, February of 22. And finally, those options, those spreads that I took, are back to break even after all this time. So it just took a little bit of hodling. But merger arbitrages are a long game, and so we're hoping everything cashes out. So Caterpillar, that is a 50% level, which it is holding, not stopping out. We're good on that one. Eastman, this is a long-term, let's see, where's that? This is a long-term, like weekly level. Yeah, weekly level that it's kind of consolidating on. Going to see if we can maybe try to get a break up. If we get a break down, I'm not going to like it so much. So that is one that's still a valid trade. I took that one, I think, 2 weeks ago. Kroger. I'm just going to hold Kroger because of Jen. And, oh, look at this. Look what it survived. It survived a perfect pullback from last Friday to 46.41. Nice little thing in there to come back up and retest the high for a good little short-term trade. But, yeah, that, again, though, is coming off of an October 22. Man, I love it when things just are nice clean like that. So October of 22, you hit the 50% from the 2019 to the all-time high there. So it's holding. Nice little kiss there in October. And then we had another little 50% here. Sometimes they don't work like there, but we'll see. But here's the level that needs to hold. Basically, doesn't need to get down to the 40s. So good long-term pullback on Kroger. MKTX, which I think a lot of people have watched. I got into this back in November. So my initial buying point is here. Here's another example of one of these valley of risk trades. In other words, you had a big old run. By the way, MKTX is a bond trading platform. Don't have it since I don't trade bonds, but they are going to, it's been very correlated to moves in bonds. And so comes back all the way down to here. Let's just out of curiosity see what happened as it was breaking out of the cloud. So comes out of the cloud. Well, this was my trade essentially. So MKTX came out of the cloud here in November, and then it pulled back to this nice, clean 50% level. Great example. Okay, it was this trend. Clean 50% level, which also happened to be a spike. TradingView data is not really showing me this, but basically it was a little spike here. I get the alerts on Thinkorswim. Yeah, sometimes you can see the gappy data. TradingView is not exactly consistent, but anyway. So that 50% level was key, and so that triggered this trend up. Took some profit in here to make the trade much less risk, and so that's why I'm okay holding this in the case that it pulls back to 308. So I like this still. I definitely like this still, even if it continues pulling back to 308, because I really want to see it come up to 411. Basically, kiss 400. Moving on. NCLH. So this is a kind of a non-standard trade for me. This is sort of like it's a bullish divergence kind of situation where I noticed I got an alert on this. Again, I think it was also a spike. Yeah, it was a spike that drew my attention to it here. But what I noticed on the daily was, this is cruise lines, it was making higher lows. And it's another one of these value plays. It could slowly start be trending up. And so still in NCLH, trying to play this as a low. Going to try to take it all the way back up to the 50%. This level right here. Again, examples of 50%. Going back to 2020, pandemic. Nobody's going to take cruise lines because they're a big cesspool of sickness, being all in a ship with each other. It was the narrative play for people to buy it because it really seemed like a smart thing to do because they got so on sale. But the problem is everyone got into it. And so when it pulled back up to this 50% level of the drop, man, look how cleanly it held that 50% level. That was where you should have taken profit. But now, bag holders, of which some of my good friends are, I'm in with solidarity, trying to get this thing back up for them. On was actually a trade I took this week. On semiconductor, you can see here, the reason for that is we got this little trend from January. It's pulled back to the 50%, held it a few times. It was also a spike. So my stop is going to be below this low. It's sitting a little negative now, but we will see what happens at this level, trying to take this thing back up to the top. Truist. This was a post I made, and I bought this from my phone because I didn't want to miss it. I FOMO'd, but it hit the level here at 32, let's call it. Now we pull back to it again. Fingers crossed. Tesla, it's probably going to hit 160. Waste management, I just hodl that. Okay, that's all the ones I care about. We've already talked about Bitcoin, but just if you come in here late, before you go into the weekend, you need to have an alert set for the pullback on Bitcoin to 25,250. Very, very likely going to pull back to this level, which matches with the past price there. Ethereum, same thing. Looking for a pullback to the 1750 level. All right. And then now, what has the market done? Let me clean up a little bit here. Let me clean up all my day trading stuff. What is the verdict after all this boring week of, man, this is, ugh. I like trends. I like nice, big, meaty trends. All right, so The level, the level, based upon the entire 2022 stock market bear trend, the 50% of that level is 41.5525 in futures. We'll cross check it with SPY in just a second. The close for this week, April the 21st, 2023, the closing price is 41.5625. 2 bars to close above it, just like the DXY, 2 bars to close below it. Technically, it has broken the level. Did SPY do it too? Yes, sir. I can look at on. SPY has not broken the level. SPY's level is 14.05. Hasn't quite closed above it yet. What about SPX? Probably going to be about the same. SPX, same thing. Holding that level. Holding that 50% level. Not yet. NASDAQ. NASDAQ still has a ways to go before it gets to its 50% level there. But it has most assuredly held the January and March highs and just kind of sitting in this little auction zone right here. Didn't have much news this week in the stock market to try to push it out of that. Let's take a look at the calendar for next week. Next week, by the way, I've been using this for over a decade now. Forex Factory calendar. Let's just do USD because that's going to affect the stock market. So next week we have consumer confidence, GDP, which is and unemployment, as well as PCE price index. So Thursday and Friday might be some big days for waking up at 8:30 and trying to trade them. Hopefully, I hope that those give us some trading opportunities. That's what I hope going to next week. All right, one last question somebody posted on. On is On Holdings. Oh, these are the shoes. These are those shoes. Oh yeah, the reason I don't have these shoes myself is because I have a very wide Bigfoot. And I don't think they have the wide versions. So I'm a big New Balance fan myself. So it's ripping. There's some kind of narrative out there. All right, so you're long 33.50. How'd you get in at 33.50? Oh, because you were looking to play new highs. So No, you can't do that. No. You can't do. Okay, let's see. 33.50. Are you already in this or did you do this? I'll tell you how. Here's how I would. Okay, so basically break that high with a stop of 30.46. I probably with a stop down in there, basically what you'd be looking for is if it comes back into this range, does not break out, you're going to get out of it, maybe. But what I would like to do, and you may not get it, is I would like for it to pull back to maybe this level right here. If I was going to play this, and this is actually a very reasonable thing to do, because, and I'll talk about why I like this as a theme. Because from this trend all the way up, the 24.48, let's call it 25, that's the kind of thing I would like to see. Because you already had a pullback here in March. You know, I'd said this week you haven't heard about any IPOs. This IPO'd in, okay, well, yeah, this IPO'd in 21. This is why you don't buy IPOs, ever. No. Don't buy IPOs. You'll always get a better opportunity because have you heard of any IPOs this year or last year? No, Because they're smart. They know to put IPOs out when people are super bullish and throwing money at stuff. When people are feeling bearish about a recession, blah, 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 they don't IPO things. Because the point of an IPO is not to make you rich. It's to make the initial investors rich with your money. So don't fall into that trap. Wait for something like this to happen. You're basically back at the IPO price. Oh, that's interesting. That is interesting because basically what you're at right now is the IPO price of, what was it, 34.84? That's the opening price. Actually, no, the opening price of the IPO would have been $35.40. So I don't like this breakout because essentially you're going to find that as a psychological level there. Notice how when you had the IPO on, it came up, got back above it, boom. Now you had a little rally here, came back, held it. That's going to be a level. Once it lost that level, that's what triggered this down move. And so now that you approach it once again, you're going to see some kind of hesitation here. Doesn't mean it can't break through it, but that's going to be a key level. And I don't like taking a breakout when I've got this. It's just so close to me up here, this level. I'd rather look for a pullback. So I'd wait for it to pull back to here. You may not get it. If you got to do you. If you miss it, disclaimer, this is not financial advice. Don't blame me. But I would rather take it on a pullback to that level. I would. And you've already had a pullback to a nice 50% right here. Oh, man, look at that. So you could have either done a breakout once it got above the cloud here, or you could have done the pullback to here. You're chasing. The reality is this. When I see something like this, now that I know what it is, I think about something like not MicroStrategy, like Monster Energy drink. Like, who would have thought that sugar water would do something like this? So On is definitely what I would call a trendy consumer product. Like Monster being a trend kind of consumer product. So it has a lot of upside just based on that. It does. It really does. And so what you may be seeing here is the start of it. Now that it's gotten past all this right here. I know a lot of people that love those shoes. My brother-in-law and my nephew, he has these little bitty Ons, basically. He's got these little bitty Ons for 4-year-olds. So I like it. And I'm going to set an alert at 25.26, see if he can come back to this gap level. Casey Lewis. So thank you for bringing it to my attention. I like it, but I'm going to play it my way. So that's good. I'm glad, and thank you for bringing that to the chat here. I really like it. Let me clean this up a little bit. I'm going to make a post on the Discord, which, by the way, last plug, come join. Links below to join my trading community. I don't charge you for it. I just want what we just saw here, where someone drew my attention to an opportunity on something. That's why I do this. I can't look at everything. I can't think of everything. I like having people that are also trading to share ideas and kind of crowdsource opportunity generation. So hope to see you there. Thanks for joining me this Friday. I hope you all have a great weekend and trade wisely. See you next week.